backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Business Standard Banking Show, where we bring you the story behind the latest developments in the banking sector. It is the 26th of October and I am Ruchika Chatravanshi. Our cover story today is about whether the RBI's hackathon can change the fintech landscape. In Banker's View this week, we have with us the Chief Executive of Tone Tag, Kumar Abhishek. The Banking for You segment this week will decode RBI's currency swaps. Our consulting editor, Tamal Bandhopadhyay, joins us to talk about RBI's open market operations, Kotak Mahindra Bank's new CEO, and more for our expert take. At the end of the show, we will tell you the results of the last week's poll and the question for this week. RBI, for the second time, held its global hackathon called Harbinger 2023 Innovation for Transformation with the theme of inclusive digital services. The registrations began in February and the final evaluation was held on October 10th and 11th. What are these hackathons all about and the problems they are trying to address? Our cover story tells you all.
The Reserve Bank of India, Harbinger, a global hackathon, is gaining traction. The results of Harbinger 2023, the second edition of the exercise, received 154 proposals submitted by 28 participating teams from India and other entities from Australia, Canada, Germany, Singapore, Sweden, UK, and USA, among others. This response compares to the 363 proposals submitted during Harbinger 2021 by teams from India and 22 other countries. It is important to remember that responses depend on the problem statements for which solutions are sought. So, what are the Harbinger hackathons all about? It's an event organized to bring together people and entities for the development of innovative solutions to existing challenges in specified areas through problem statements. These statements are worked upon by participants who include, but not limited to, individuals, teams, entities from the hardware, software, and coding community during the time period of the hackathon. Participants submit ideas, create solutions, exhibit the prototypes, and the solutions are judged by a panel to determine the winners of the hackathon. The solutions achieved are primarily technology-driven innovative solutions that can be used or promoted by the organizers to refine the existing processes. The winner gets to keep a purse of 40 lakh rupees, with the runner-up at 20 lakh rupees.
If you look at from the participant who participated in these hackathons, first of all, this is a validation of their idea or a concept with experts ranging from the regulators to industry to other participant, even technology experts. So if you see, it's a validation of what they're trying to do completely, of what they're planning to do, right? Secondly, I think if there are any possible regulatory implications when these solutions go out, then again, RBI gets a first-hand input and then they can look at it. And then as these solutions get rolled out, we could expect some additional policy support. And lastly, and most importantly, for these companies, initial capital, right? I mean, if they are validated, if they win, the capital, not only I think RBI gives a prize, but also it brings attention on these companies so that early stage investors and angel investors who monitor these companies very well, and then their funding part becomes slightly easier. And of course, the additional business because of the visibility. So on the whole, I think it's a very impactful event for the entire fintech ecosystem from that perspective.
In the Harbinger 2023 hackathon, solutions were sought for developing user-friendly digital banking services for differently abled people, creating regulatory technology solutions to enhance compliance efficiency, exploring use cases and solutions for central bank digital currency in retail transactions, and improving transactions per second throughout and scalability of blockchains. And here are the results on your screen. The hackathon ran in 3 phases, with the shortlisting of proposals in the first phase, solution development in the second phase, followed by the final evaluation in the third phase. During the preliminary screening, 28 proposals were shortlisted across 4 problem statements by a panel of judges. Over 6 weeks, shortlisted teams developed solutions under the guidance of an external mentor. The final evaluation was held on 10th and 11th of October in Bangalore. The 28 finalist teams presented their solutions to an independent jury. The winners and runners-up were selected based on innovation, technology, user experience, security, and ease of implementation.
The winners of the hackathon actually go on to use the cash prize to develop their ideas to be put to practical use. One of the previous hackathon's winners spoke to Business Standard's Raghu Mohan this week. Kumar Abhishek, founder and Chief Executive Officer of Soundwave-based merchant payment solution company ToneTag, talked to Raghu about the benefits of the sound-based payment solution and what changed for him after winning the RBI hackathon in 2022.
Welcome to the banking show, Kumar. Good to have you here. Kumar, can you tell us why you opted for a sound-based system?
Thank you, Raghu, for having me here. The idea behind sound was to use a protocol which can at one end allow people who are not digitally savvy to have a very idiot-proof way of using financial services by just a protocol which is analog, which is as ubiquitous as your voice or a basic sound, right? And the second was for customers who are digital savvy, can this platform improve their experience multifold, right? So you fumbling with an app versus you just speaking and a payment gets done. You know, there's a 5x differentiation in the experience, right? So that's the use. That's why we choose sound. Again, you know, analog protocol in general is a more natural way of, you know, achieving stuff, right? So, and as you know, people keep saying, hey, what would be the next experience which customer is going to get? And we say that, hey, the most better experiences are going to shift you towards being more natural, right? So you need to learn how to operate an app or say, do stuff like scanning. But to speak, you don't have to literally kind of, you know, learn anything, right? So you can just speak and a transaction can complete. And that way, at one end, we can allow every consumer on this planet to benefit from digitalization. On the other end, people like us who are digital savvy will get a great experience. Today, I order my coffee by just speaking. And there's a fabulous experience, by the way.
For the benefit of our audience, can you tell us how this will work when you order a cup of coffee at an outlet?
Yeah, on the onset for a customer who are going to enable with this service, they can simply open one of the apps where we are there and then just say, order one cappuccino from Blue Tokai and give an address, say VR Mall or MG Road, right? And, you know, it will just prompt you back that, okay, ordering a cappuccino for 180 rupees. Shall I go ahead and process this? And you say yes, and the payment is done. On the back end, if it's a wallet-based transaction like Amazon Pay, then you don't need any additional authentication. But say if it's UPI, then it will prompt you to enter the UPI PIN. But that's all. That's as simple as it is. And when you are in the store, this is when you are not at the store. But say you are right now at Blue Tokai.
Yeah.
Then, you know, once you open one of our partner apps, because we are a B2B product stack company.
Correct.
Amazon, for example, is one of our partners. So if you open the app, then, you know, based on the sound zone, right, the app will decode and understand where you are. And then you can be presented with a store menu without scan, nothing, right? And if you already know what you want to buy, then you don't even need a menu. You can just speak and say. We have very recently also enabled these services at fueling stations, where you can just say, pay for petrol, and it kind of invokes our service. And through our service, it's able to learn where you are, and then you can complete the purchase.
And how many customers have you onboarded?
So for a customer like you and me, we may be using it, but the tech is working in the backdrop today. But very soon, with the new UPI 123 and conversational UPI launched, which has happened, customers like us will also start real-time experiencing it, right? But as long as the tech stack itself, if you see, it consists of three things. One is we can do data transfer over sound, which means you don't need protocols like radio frequencies, NFC, Bluetooth, and stuff. Very seamlessly, in a very non-idiot proof way, which means that no pairing, nothing is needed. You can do basic data transfer over this stack. We can reach 1 kilobytes per second, right? That's the kind of throughput we have been successfully able to achieve on customer-grade mobile phones. Second is we can understand your immediate location using acoustic profiling. And third is we can put identification on your voice or anything which is audio. And this kind of is also the way the algorithm works. It can detect deep fakes and stuff like that, right? So it's just like very secure that fashion. So combination of these is already getting used. We are today serving more than 30 million interactions a month across, from a unique customer perspective, something around 38 to 40 million customers.
How has lives changed for you and ToneTag after winning the RBI's hackathon twice over?
The world today knows, the Indian Central Bank, right? So, our governor also won a global award. And the kind of work we have displayed at G20, now the world reckons the kind of work the regulator has been doing. And Harbinger or Hackathon is one such initiative started by the regulator. And what it does for companies like us is it helps us present a solution to large-scale issues which the regulator is seeing. And trust me when I say what Indian regulator is seeing, which means that the global regulators are going to pay attention to it. It's a problem which is evident globally, right? And some of those problems are brought in this Harbinger. And we got a chance to present our solution to solve for those problems. And we won that challenge. And what it has done is that, number one, it has brought confidence in ecosystem participants about the technology which we bring for the ecosystem. And also, a huge strength in the kind of solutioning which we are bringing. And some of these, while is going to solve the problems which the regulator is seeing, but at the same time is going to strengthen the financial institutions of the country towards those problems. So, for example, one such problem was that, hey, can I still pay if I don't have a mobile phone, right? And we gave a solution, and it was really appreciated by both industry body and the regulator. And very soon, the solution will be there for people, and not just India. It can be a global product stack coming right from India, wherein you don't need a phone to make a digital payment. So contextual-based commerce and payments, and second is payments, low-value transactions without the need for a mobile phone. These were the two problem statements where we participated, and we won the challenge. And now we are very appreciative that the industry has noticed, and at various phases, we are kind of scaling this up.
Thank you, Kumar, for being on the Banking Show. Really appreciate that you took time out for this. Thank you once again.
Perfect. Thank you. Thank you, Raghu, for your time.
ToneTag has certainly found ways to reach out to those who may not be very digitally savvy and further push digital transactions. There was a buzz this week that the RBI may have rolled over a portion of its $5 billion foreign exchange swap. Last year in April, RBI did a foreign exchange swap under which banks bought US dollars from the central bank and simultaneously agreed to sell the same amount of dollars at the end of the swap period. Now, what is this currency swap and why does RBI do it? That's what we are talking about in our Banking for You segment today.
Currency swaps are a tool by which two parties agree to exchange a specific amount of one currency for another at an agreed upon exchange rate. The exchange may or may not have a specified maturity date and would typically include the principal amount, the initial amount of the currency that was swapped, and interest payments. The interest rate could be either fixed or variable, depending on the term of the agreement. Multinational corporations, financial institutions, and central banks commonly use such swap deals for different purposes, such as reducing borrowing costs, assessing foreign capital markets, and managing currency risk. They also come with their own set of risks, like credit risk in case one of the two counterparties defaults on the exchange agreement, or market risk in case the exchange rate movement adversely affects the currency's value. The Reserve Bank of India announced a currency swap with financial institutions in April 2022 to withdraw excess rupee liquidity from the banking system. Under this swap agreement, which matured on 23rd October, the central bank sold $5 billion to banks and took back nearly 40,000 crore worth of rupees from the banking system. Apart from liquidity management, currency swaps also have a bearing on the currency's value. Like in the RBI's case, offloading dollars in exchange for rupees can lead to an appreciation in the value of rupee. Conversely, on the maturity of the swap deal, the central bank will release rupee currency in the banking system at a premium, considering the depreciating value of the rupee, and take back dollars. This, in turn, may lead to a strong dollar demand by banks, which, as a consequence, exert further pressure on the rupee.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Now that we are all caught up about currency swaps, let us tell you more about some other instruments through which the RBI manages currency liquidity. For our expert take this week, I spoke with our consulting editor, Tamal Bandhopadhyay, about RBI's recent open market operations, the increase in US Treasury yields, and Kotak Mahindra Bank getting a new CEO. Here's the chat. Hi, Tamal. Welcome to the Business Standard Banking Show. This week in your column, you're talking about RBI's open market operations. Now, it's been 3 weeks since RBI actually surprised the markets with its OMOs. One of the main reasons is obviously to manage liquidity, the currency. What are some of the other reasons why RBI resorts to these open market operations? Can you explain to us?
Yeah, Ruchika, actually, traditionally it's perceived that OMO is for liquidity management, because when Reserve Bank of India buys dollar, which means the banks get money out of that, so you are adding liquidity. And when Reserve Bank of India sells dollar through open market operations, it absorbs liquidity. So it's something like, people might say it's like CRR, but it is not. It is not. Liquidity management is only one of the at least three things that OMO does. First is liquidity management, as I said. Second would be the yield management. I mean, Reserve Bank of India, of course, definitely would not say that. But historically, we have seen that Reserve Bank of India also manages yield. Like for Dr. Reddy, he used it a very brief OMO, very short OMO. But in his time in 2005, if I remember correctly, he signaled that the yield will go up. And similarly, another RBI governor, Subbarao, he announced an OMO, and he actually wanted to manage the yield to bring it down so that the banks would not require to make larger provision and book losses in their investment book just before the year end. In March, he did that. So because OMO, what happens? You are adding to the supply side, and obviously it will have an impact on the yield. And of course, the cutoff yield at the auction, RBI itself decides. So in this case, I would like to believe it will not be to push down the yield. It will be to push up the yield. Theoretically, it can go up because the supply is more, and practically RBI, it's his own handle to decide on the cutoff window. And finally, it's a very creative thing, I would say. Through this route, RBI also can have a handle on the rupee.
Now, the US Treasury yield has crossed the 5% marks, and our markets have also reacted to it on Monday. Is there a connection between that and the RBI operations?
Yeah, exactly, Ruchika. Meaning RBI did not anticipate this and did that, but there is indeed a connection. Why? And that's where the rupee thing comes. So what happens is this: when US yield has been going up, it touched 5%, and 10-year yield I'm talking about. So then what happens is the spread or the difference between US yield and Indian yield shrinks. Now, when for the global investors, why would they come to India and buy Indian bond when they are getting higher returns in US? So this is the problem. Just for history's sake, I'm telling you, at this point of time, the spread between US 10-year and Indian 10-year is around 2.4 percentage point. And this is the last seen in April 2006. So you can see it's a 17-year. Since 17-year, this yield has not been so narrow. But just to a few things, the lowest spread there had been even much lower, only 61 basis point historically. That happened in 2004, and in the past 2.5 decades, since 1997 or so, 1978, the average spread between India and US yield is 6.94%. Yeah, it's has been 4.64 percentage point, 4.64. So now it's 2.4, it's much less. And the highest yield was, the difference it was 6.94 percentage point. It was recorded on May 31st, 2012. And at that time, what was the US yield? Which is 5% now. At that time, US yield was 1.56%. Versus 5% now. And Indian yield was 8.5%. So Indian yield is much lower now, and US yield is much higher now. But the spread is shrinking, and that would lead investors to shift from Indian market back to US. And so, which means what? That will be less dollar coming into the system and putting pressure on rupee. So it could be a master stroke and a very innovative way of managing the rupee as well. That's the third way of using it.
The other important news that happened in the banking sector was the appointment of Ashok Vaswani as the CEO of Kotak Mahindra Bank. Tamal, the market seems to have reacted a lot to this news. Why is that?
Well, it's a pleasant surprise, I would say, and it's a master stroke by Uday Kotak, if I may say so. Because, everybody was expecting somebody, an insider. I would not name it, but certainly this gentleman's name propped up, and there's no insider involved. So it actually serves multiple purposes for the bank. One is this gentleman is the first global banker coming to India since 1994, when Aditya Puri came. But that was a different field. Aditya Puri started a new bank. And you remember Aditya Puri also started his career in India. Then he, of course, shifted out, and he was one of the favorite men, rightly so, chosen few of John Reed, then Citibank global head. But after Aditya Puri, there are many foreign bankers ran Indian banks or even still running Indian banks, but they are Indians and running the foreign operations of India. Here is a banker who had his entire banking career overseas, both in Citi as well as Barclays. And he's a specialist in consumer banking. So it has come with, right kind of credentials. He's also a techie when every bank is, striving to become tech companies. That also will help. And finally, had there been an insider, the market would have perceived probably that Uday Kotak will do backseat driving. But this gentleman, by bringing him, he has actually scotched all those things. It's absolutely now, it will be a board-driven bank and run by this entity.
Thank you so much, Tamal, for shedding light on all these issues. RBI's OMOs, certainly you've explained very well how it is a very innovative ways to address the concerns that are arising because of the global headwinds as well. And also about the US Treasury reads and the appointment of the new Kotak Mahindra Bank CEO. Well, we'll see if how this master stroke, as you call it, pan out in the days to come. Thank you so much, Tamal, for joining us today.
Thank you.
It is time now for our poll results. Here's what we asked you last week. Do you feel your online banking is secure? 62.5% of our respondents said yes, they felt secure, while 37.5% said no, they did not feel secure. Well, that's a reality check for the banks. Now that most of the 200 rupee currency notes are back with the RBI, ATMs are supposed to be dispensing cash in 500, 200 and 100 rupee denominations. However, with the highest currency note now gone, there is likely to be greater demand for these lower denomination notes. So here's what we are asking you this week. Are you facing a shortage of 100 rupees currency notes? Our poll is open today, that is Thursday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.